Hey, what's up everybody? There are a number of people that want to get into real estate investment projects just to make decent returns on cash that they have on hand versus putting it in interest-bearing accounts. This means being an active participant on the capital side, but allowing someone else to handle the day-to-day execution of the project. If that's you, let's talk through what you should do and expect when investing in someone else's project. So if you're ready to talk about it, let's do it. Before I get started, I wanted to share a few quick thoughts after this 2-month window of not producing content. There are so many changes that we are experiencing as a country right now. It's difficult to maintain a handle on our lives and emotions during this time. With record unemployment, issues with policing of Black Americans, and still being in the midst of a pandemic, Americans are facing some difficult challenges. This is creating change that will ultimately be great for us. My hope is that you're staying safe as you help bring the change America needs. But just make sure you know, we need these changes. People that look like me shouldn't have to fear about whether we'll make it home during interactions with police. I won't even touch on the growth that needs to be had by all Americans with respect to race and how Black people are treated in America. Our communities need leaders on all sides to address these issues immediately. So don't sit on the sidelines during all this change. Get out there and make this country better for all of us. I'll leave a couple of ideas on ways you can make positive change as we fight to come out of this difficulty we're under. So let's get back to our topic. So there's a growing number of people that want to invest in real estate projects, but don't want to have the day-to-day responsibility of managing a project. These relationships can be tremendously helpful to property investors because it can give you access to cash to help fund your investment opportunity. Today we'll talk about what you should consider if you're looking to get started in being a capital partner on real estate projects. So the first thing is going to be having an understanding of real estate projects. You don't need to know all the ins and outs of a project, but you will need to know at a high level a few different things. You'll need to understand the market. When approached with a project, you should be able to find out the dynamics of the market where the project is located. If it's a single family, you'll need to be able to look at a neighborhood and understand if the returns that are projected are actually possible. If it's multifamily, you should be sure that the rents and the necessary economics are in place to make the property work. This will mean researching the property itself and recent sales, knowing what a property should look like to receive the expected return. This is a fundamental research that you should do even if you aren't doing the project yourself. It's also research you should do periodically, as it may help you find investment opportunities to be a part of in your target areas. The next thing is to understand the track record of the investor. You'll need to know what types of projects they've been a part of and if this project fits their wheelhouse. If the investor has only completed cosmetic renovation projects, then you should ask questions about the decision to do new construction. Be sure you understand how the investor will handle any body of work that is outside of their typical project scope. If there isn't clear understanding, a solid team, or a plan to handle that work, then you should be afraid. The worst thing you can do is invest your money in a project with someone that has not had success in most aspects of a construction project or managing an investment. There are times as an investor that you can run into problems, and this is acceptable, but the investor should have enough experience and the wherewithal on how to get out of those problems without sacrificing your money in the process. The next thing is you should become completely familiar with the foreclosure process. In most situations, unless you're part of an investment group, your cash will represent a junior position loan on the project. The most important thing to understand is what will happen to your investment if there's a mortgage that the investor fails to pay. How does that impact you, and what will it take for you to salvage the investment if you need to take steps to get out of the deal? Don't wait to get into a project to know these things. How you secure your position in a project is very important. Knowing how to protect your interest in the project doesn't lie with the project manager, it lies with you. In addition to this, make sure you understand how the investor will be sourcing the capital for this project. If there's any additional cash needed to complete the project, be sure you get some assurances that the cash will be there when needed. If the funds are tied into another loan on the property, you'll need to be sure it's a sufficient amount to get the job done. You'll want to know how those funds will be accessed and on what timing. If the investor will bring a portion of the cash to the table, you'll want to know how that money is being sourced and its availability as well. It's okay if it's currently in another property, but be sure there's a plan to take care of any expenses until that cash is available. If you've covered all of your bases by doing the research that I've just mentioned, then you should be able to comfortably invest without much worry. But you'll still have a little more work to do. You'll want to draft an agreement. It doesn't matter if you create the agreement or if the investor does it, but you both have to agree on the rights of each party in the agreement. You should ensure that the investment window is included in the agreement and your anticipated return. Be sure to also have a provision that helps you understand what you'll receive if the investment window is exceeded. If the investor happens to need more cash to complete the project. Because who doesn't need more cash to complete a project? What will those terms be, and will you be the one providing the cash? Also, if you aren't providing the cash, you'll want to know how that additional cash will affect your return. There may be additional items to mention in the agreement, but these are just going to be the basics. Finally, you'll want to record the agreement with your county recorder. This ensures that any party that is a part of the deal or desiring to be a part of the transaction knows you're an investor in the deal. You must be sure that when the liquidity event happens, or if there is a need to be paid a dividend or incremental return, you are in line with everyone else to get paid. Don't take no for an answer on this one. This helps establish the priority of your investment in the project. If you are investing at the time of acquisition, be sure that the title company involved will be recording your agreement. If you're being added after the fact, you can go down to the county recorder on your own to record the document. There will be a fee associated with the recording, but it gives you the security needed to invest without being an unknown party in the deal. So now you've done all the research and you've completed the transfer of funds. What should you do now? The final thing to work on is establishing a periodic check-in where you understand the progress of the project. If you come up with an agreed upon reporting format, such as informal conversation or a Gantt chart, then just be sure that the most current info is being delivered. Also, ensure that you're checking in every once in a while on your own if the property is accessible to you. You want to match up the progress to what you're seeing and hearing during your check-ins. An easy way to do this is have the investor provide pictures of the work so you don't have to make these trips. So collecting your money shouldn't be a pain if all went correctly. Your agreement should state how you'll receive the funds, and the property shouldn't exchange hands until your agreement is satisfied. Just make sure you document at the appropriate time how you want to receive your funds to ensure that there's no confusion. Lastly, try to keep a good relationship with the investor and ensure that you're helpful during the project, if need be. The worst thing you can do is to be the skeptical cash investor that only wants to identify problems without solutions. You're in the project together almost as two people are in a marriage. Working toward the common goal of project completion is very important. If there are gaps in the plan, don't hesitate to provide some assistance if you can. Hey, so I know that was a lot. This isn't a complete explanation of everything you'll go through as a capital investor in a real estate project, but it does help you understand about 90% of what you should go through. Just be sure that you're always willing to understand what's happening in the deal, and you'll always be covered. Also, even if there is a bad experience, be willing to learn from it for future opportunities. Your goal should be to build a Rolodex of investors that have projects that you can invest in with the understanding that both of you can trust each other to make the investment work. So, yeah, that's it for this topic. I hope it's helpful. Hit the subscribe button to see more content just like this. Also, hit the bell icon to be notified when new content is available. So until next time, stay safe out there, and I'll talk to you soon. Take it easy.